Imagine a financial advisor who never sleeps, never makes emotional decisions, never misses an opportunity, and continuously learns from every market movement. Imagine a system that understands your complete financial situation in exhaustive detail and adjusts your strategy in real time as your life circumstances change. This is not a distant fantasy anymore. This is what artificial intelligence is becoming right now in 2025. Artificial intelligence has the potential to become the most powerful financial tool ever created, one that could fundamentally transform how ordinary people build wealth and achieve financial freedom. The global market of AI for asset management was valued at $84 billion in 2024 and is projected to grow from $107.7 billion in 2025 to $1,168 billion by 2035, exhibiting a compound annual growth rate of 26.92%. This explosive growth trajectory reflects institutional conviction that artificial intelligence is not a niche tool, but the central infrastructure of future finance. According to Mercer, 91% of asset managers are already using or planning to use artificial intelligence in portfolio construction and research workflows, up from 55% in 2023. Organizations applying artificial intelligence in wealth management can expect an 8% or higher rise in assets under management and over 7% growth in revenue due to enhanced advisor capacity and sharper financial planning. These improvements are not marginal. They represent fundamental restructuring of wealth creation economics. Automating personalized client interactions with artificial intelligence helps cut servicing expenses by 30%, raise client retention, and grow the client base by 10 to 20% without extra engagement steps. The three superpowers AI brings to finance. The first superpower artificial intelligence brings to financial management is the ability to analyze unimaginable complexity. Artificial intelligence analyzes investors' income levels, financial sustainability, risk appetites and tolerances, profitability goals, taxes, and investment histories to suggest the proper portfolio composition for each investor to maximize financial gains. A human financial advisor might consider perhaps 50 variables when constructing a portfolio. An artificial intelligence system considers thousands, identifying correlations and patterns that human cognition could never perceive. The second superpower is continuous optimization. Artificial intelligence continuously monitors the asset price fluctuation patterns, foreign exchange, interest yield, and inflation rates on balance volumes, and other capital market performance indicators, revealing dependencies between the indicators, predicting the market moves, considering investor sentiment, and delivering insights into emerging opportunities. Rather than quarterly or annual portfolio reviews, artificial intelligence systems optimize constantly, 24 hours per day across multiple time zones. The third superpower is accessibility at scale. Artificial intelligence enables real-time calculation and forecasting of all necessary performance metrics at the portfolio, investment, and asset class levels, instantly spotting potential risks and prescribing the optimal steps to balance and hedge the portfolio. Wealth management that previously was available only to the ultra-wealthy is becoming accessible to ordinary people through artificial intelligence automation. AI for every advisor. The most striking example of artificial intelligence transforming wealth management is Nevis, founded by Mark Swan, an artificial intelligence product expert who previously worked at Revolut building cutting-edge financial technology. Nevis came out of stealth in early December 2025 after raising a $5 million seed round from Sequoia in 2024 and a Series A of nearly $35 million from Sequoia, Ikeoniku and Ribbit Capital in 2025, bringing its total funding since inception to $40 million. Nevis's thesis is simple. Artificial intelligence will not replace financial advisors, but it can turbocharge them, offering tools that give wealth managers 80% of their time back. This insight is profound. Rather than viewing artificial intelligence as a threat to advisors, Nevis recognizes that advisors are drowning in administrative burden. By automating that burden, advisors gain the freedom to focus on what they do best, building relationships and providing judgment on complex financial decisions. Swan noted a contrarian realization from his research. While many predicted tools for artificial intelligence would replace human roles in the financial services sector, he believed the opposite, that in a world increasingly dominated by artificial intelligence, human-led advice would become all the more important. This insight captures something crucial that many observers miss. The future is not artificial intelligence or humans, but rather artificial intelligence and humans working together, with machines handling computational tasks and people handling judgment and relationships. Private wealth for everyone? Arta AI represents the democratization thesis taken to its logical conclusion. Arta AI is purpose-built for wealth management, a highly regulated, data-sensitive domain, using a combination of technologies including agentic systems, function calling, retrieval, augmented generation, convex optimization, and traditional machine learning. Selecting the right tool for each task, whether it is conducting financial analysis or explaining the difference between asset classes, Arta AI gives members access to a suite of powerful artificial intelligence agents that can analyze portfolios, suggest investments, and provide financial insights on demand. With dedicated agents including an investment planner that engages in natural conversations to understand a member's financial profile and create a personalized investment plan, a product specialist that guides members as they explore the platform, and a research analyst that acts as a personal analyst, ideating on a theme or reflecting the member's convictions in a portfolio. Ralph Hamers, advisor to Arta Finance and former CEO of UBS and ING, stated that traditional private banking serves a fraction of the world's investors, leaving millions without access to the tools that drive wealth creation. And Arta is changing that by leveraging artificial intelligence and deep domain expertise to make institutional-grade investment guidance and strategies available to a broader audience. Natural language wealth. Adipar, a wealth management platform supporting more than 1,400 firms managing nearly $9 trillion in assets, launched Addison, a native artificial intelligence experience embedded within its investment platform. Investment professionals can use natural language to quickly analyze portfolio information, including performance drivers, exposures, and liquidity, with the platform serving firms in nearly 60 countries and aligning with Adipar's strategy to deploy native artificial intelligence and intelligent agents across investment workflows. Adipar raised a $230 million Series G funding round in 2025, bringing the company's valuation to $3 billion, with the company investing more than $100 million annually on research and development. This investment level demonstrates how seriously established wealth management infrastructure providers are taking artificial intelligence. In May 2025, Adipar acquired Arcus, a tech startup specializing in building artificial intelligence workflows, which it has since integrated into its current technology. The real-world performance impact. The impact of artificial intelligence on financial services profitability is quantifiable and substantial. Morgan Stanley's immersion in artificial intelligence helped the firm secure $64 billion in new assets in the wealth management division in the third quarter of 2024 alone, representing a 76% increase over the previous quarter and an 80% rise in assets year over year. These are not theoretical figures. These are actual assets choosing to be managed by Morgan Stanley based on the benefits provided by artificial intelligence tools. According to NVIDIA's 2025 State of AI in Financial Services report, approximately 70% of respondents say that artificial intelligence has generated a revenue increase of 5% or more, with a dramatic rise in industry companies reporting a 10% to 20% revenue boost after deploying the technology. Additionally, 60% of financial services firms report that artificial intelligence has reduced their yearly operational costs by at least 5%. The accessibility revolution. Perhaps the most profound impact of artificial intelligence is what it enables for ordinary investors who previously had no access to sophisticated financial advice. 3 financial planning technology providers launched artificial intelligence tools in recent announcements, with Right Capital launching Smart Import, an artificial intelligence-powered tool that reduces manual financial plan data entry time by 70%, and Wavest and Apex Fintech Solutions announcing a strategic partnership to deliver artificial intelligence-powered financial planning capabilities. Conquest, which has been artificial intelligence powered since its founding in 2018, raised $80 million in a Series B funding round in June 2025 and announced a partnership with BMO, with the company supporting more than 1,000 financial services organizations, including RBC, Manulife, BNY, Pershing, and Raymond James. When mainstream institutions like BMO partner with artificial intelligence-powered planning platforms, it signals institutional recognition that this technology is becoming standard infrastructure. Looking toward the future, Wall Street's artificial intelligence budget of $17 billion in 2024 is set to double as firms expand use cases across trading, compliance, and client engagement. This doubling of investment demonstrates conviction that artificial intelligence is not a trend, but a permanent restructuring of financial services. While overall fintech investment in 2024 has dropped to around $118 billion, artificial intelligence in fintech remains a high-growth area, valued at $17 billion in 2024 and projected to reach $70.1 billion by 2033. The artificial intelligence financial revolution is in its infancy. The institutions investing most aggressively today are building competitive advantages that will compound over decades. Individual investors who understand how to leverage artificial intelligence tools are gaining advantages that will persist throughout their investment lifetimes. The most powerful financial tool ever created is not a stock-picking algorithm or a trading system. It is an intelligent partner that understands your complete financial situation.